Hi, everyone. This is Rob Roy, and welcome to TradeFinder Live. For those of you that may be new with us this week, let me give you a quick rundown on how things work. First of all, we start off with our disclosure/disclaimer. This is something that we have to do. If you watched any of our videos, you're familiar with this. Please take a moment to take a screenshot and read it in detail in your leisure. If you have not seen it before, a couple of things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international subscribers and a lot of international viewers, any pricing that we talk about is assumed to be in US dollars unless noted otherwise. Again, those are the two biggies that they want us to make you aware of, but please read it in detail when you get a moment on your own. So here's how this works. We'll take a little look at the market, which lots happened since the last time we talked last week. Then we'll go through any closed alerts that we've had for our subscribers, give you an idea of how our alert service works. Then we'll go through and look at previous case study considerations through TradeFinder over the past couple of weeks, as well as look for a case study consideration for this week. And the people at Hub have done created a number of new search type things that give us more potential to find charts that look good for what we utilize within within Elliott Wave options. And we'll go through those with as much time as we have to see if we can come up with a really good case study consideration for this week. In the end, with whatever time we have left, we'll go through a general Q&A. I have the question and answers windows. You guys are already asking for particular stocks. That's usually how the general Q&A works, is you give us your favorite stock symbol and we put it on our indicators and see what our indicators say or show regarding your individual favorite stock. We'll do that with as much time as we have. Please understand that I'll only take questions at the end. And if your question isn't asked, it's not that it wasn't a good question. We just simply ran out of time. Hopefully you'll join us again in another TradeFinder and continue to ask your question until we get it answered. We are respectful of everyone's time. We're trying to make sure that we do this in a timely basis. So with that said, let's go ahead and take a look at the market. Here we are with the market from today's close. We had a pretty good rally going on throughout the day, and then it kind of fizzled out towards the end. That's important and it's not important. And here's what I mean by that. If we take a look at the 10-day moving average, I'm not going to bore you with drawing that zigzag pattern again. If you're brand new, go back and please look at some of the recordings. We've drawn this zigzag pattern 1,000 times with 100% extension level at the 381 level, which is right here, which we hit way back in early January. That's why people are tired of seeing it. And then we broke down a little bit, tested that 50-day moving average, broke to the upside. Then we came back down and broke the 50-day moving average, closing below it on the 4th of March, and then turned around and closed back above the 50-day moving average on the 5th, which was really important to get back above that not only 50-day moving average, but that 381 level. So this was a break. This was a significant breakout. When we look at breakouts, normally we're talking about our volatility strategy where we have our triangles and we're looking for breakouts of a triangle pattern. We don't care what direction it goes. We just want it to move and break out. However, one of the things that we talk about over and over and over again is when you get a breakout, the breakout day doesn't mean that much. You have to have the second day. You have to have a follow-through or confirmation day. And that goes with breaking a major moving average, breaking support resistance, etc., not just out of triangles. So here, that counted as a breakout day, but there was no follow-through. Looked like we were going to get it at one point throughout the day on the 5th, and then the market turned around and rallied back up, closing right on the 10-day moving average, which left the very next day, the 8th, in doubt. So that was Monday, yesterday. And we opened higher and again, kind of closed with a whimper. So we have to make note of the fact that both yesterday and today, we had pretty good moves that ended poorly. So the positive is that we're closing back above 381 for 2 days in a row. Yesterday, barely 381.72. I don't know if we can really count that as a closing above that level. It'd be more like closing right at the level. So I think we would look at today as the break back above 381. And also, there's no doubt that today was the only day that we closed back above the 10-day moving average. So what does that mean? Well, that means tomorrow's trading is very important as to whether or not we can get a follow-through day and close with a newer high tomorrow. Here's where the problem comes in, is we have this previous wave 5, which is now a resistance point. Why is it resistance? Well, because that's a pivot point. That's about as clean of a pivot point as you could ever ask for. For those of you that may be new and haven't heard talk about pivot points in the past, you can have pivot point highs and pivot point lows. This one's a high, so this is what I'll describe now. Pivot point high is when you have a daily bar, and so at the top of my middle finger there is the closing price. Well, then you have the next day with a higher high, followed by a third day, again with a lower high. So the middle day then becomes a pivot point. Why are pivot points important? A lot of people like drawing trend lines by connecting pivot points. So if you can look at, so we had a high here and then a slightly lower high. That's not really that clean of a pivot point. Then here on the 1st of March, we had a high and a little bit lower pivot point. So you could have made an argument for drawing a trend line here. Most certainly we had a listing of lower highs. Well, look at today. Notice what that drawing a line at 381, which that was that 100% fib extension level, the completion of the zigzag if it doesn't go to the extended level of 420. And now connecting those lower highs, now we have a perfect descending triangle pattern. And today we tried to break out of it, but closed dead on the upper trend line of the descending triangle. So again, more confusion. I don't think the market really knows what's going on. Now, yesterday, David Tepper came out and said that he felt that interest rates, he's a pretty respected hedge fund manager, now owns the Carolina Panthers football team, that he felt that the big move in interest rates was over. Maybe we go a little higher, but not much. And if we do, it'll just be a drift. So he thinks that the major threat to the market with interest rates is over, and it's hard not to like stocks at this point in time. Well, that set yesterday's rally in motion, but then as you can see, we closed lower than the open. That's not a positive sign. And then today, we did close higher than the open, so that's good. But then you note that the close was right on that trend line. So we're not clear yet, and we're really not going to be clear to the upside as far as all lights green moving to that 420 level until we're able to close above this level right here. And so the high of that day was 394. So we need to close above 394. And then you can feel pretty confident that the next stop is 420. Some are calling for higher moves than that. But we have to get above that level before we can even continue to talk about 420 being the next high. So the point is, yes, yesterday was helpful. Today was a better day. Caution is still the key until we're able to close above that wave 5 high back here at 394 that occurred on the 16th of February. So anything is liable to happen. With where we close today, we could back down and move into this triangle and have a few more sideways days. The futures are down 7 3/4 right now. Not a big deal. So slightly lower, but that doesn't really mean anything. If you've watched the futures, what happens, and this is really interesting that has occurred in the futures market lately, is what occurs between now and midnight, 1 a.m. is meaningless. Everything changes around 4 a.m. where things just turn and make their move as far as what the futures are going to do. So when I do my SPY updates, sometimes I do them midnight, 1 a.m., 2 a.m. You've heard the timestamps. those futures moves are meaningless at this point. And I don't really want to stay up till 5 a.m. and then just get back up at 9:30. So that doesn't work too well for good sleep habits. But as far as the market, those are the particulars. This descending triangle, if we break above that, that would be a positive sign. It would be even more positive if we break above 394. So that's where we are as far as the market itself. Looking for tomorrow to see if we get a follow through, at least back above that 10-day moving average. We have had 2 closes above the 381 level, but we're looking for a second close above the 10-day moving average, followed by a close above 394. So that's it with the market. And taking a look at a recent case study that we did for our subscribers, you can see here that we did, it's in the volatility strategy on NGA. So if it's in the volatility strategy, extremely high likelihood that it's a triangle in one of our, I hate to say proprietary, but one of our unique is a word that I think is safe strangle setups that we utilize, where we go further out of the money than most people trade, but we do that in order to put the math in our favor as far as delta and gamma, the speed of the breakout. But this is kind of a dual thing here. It was a profitable trade, and as I show it to you, here was our entry on February 14th or February 12th, and there's the chart. It was a really nicely formed Elliott wave descending triangle. That is nicely formed a triangle as you could find. So from that standpoint, like, wow, that's great. So the stock is trading at, as you can see right here, around $23 at the time. And then when we look at the strangle, a 40 strike call, a 20 strike put cost $5. That's a lot for a stock that's trading just under $25. That means the options are juiced. And why are they juiced? Because look at what happened before that. This volatility, all this vertical movement, volatility. So what made this attractive was the fact that we had a stock that could move, and it was only a $25 stock. But this shows the intricacies of trading options and how important it is to learn the Greeks. Delta, gamma, theta, vega, rho, all those things, interest rates, which is what rho is, really isn't that big of a deal. Hasn't been for a while because interest rates have been so low. But back years ago when interest rates were higher, rho mattered. Rho just doesn't matter anymore with rates being so low. But the rest of the Greeks do. So implied volatility with the way that they can utilize and move options around is a big deal right now. Because watch what happened with this. And I do know better than this, but it was just so enticing to see such an extremely well-formed triangle. I mean, they just don't get much better than that. But there's a reason you're paying $5 for an out-of-the-money strangle on a under $25 stock. So here's what happened. And you can see the total days in the trade was 20 days, and we made 21%. But look at this breakout. We had a massive breakout all the way down to 15. It touched on the low, which means the puts were $5 in the money. Remember, the entire strangle only costs $5, and you've got the puts $5 in the money. So you're thinking, wow, when you add in the extrinsic value, that should be hugely profitable. Didn't work that way. So we came down here, a couple of reasons that we exited on this day. Number one, we're getting oversold. Look where we are from the 10-day moving average. Say it with me. I know we have a lot of new people, so I need to say it again. I haven't said it in a couple of weeks, so you'll be okay. No security in any time frame is very far away from the 10-day moving average. So we were getting oversold because we were getting some separation from the 10-day moving average. And this triangle that had formed back in December that broke out, which yielded that big vertical breakout move, was now fully retraced. And what do we talk about all the time? Breakouts of triangles get retraced. We don't know how long it's going to take, but they do. It's like gaps. Gaps get filled. We don't know how long it takes for gaps to get filled. Triangles retrace, but again, we don't know how long. This one was pretty quick in retracing an entire move like that. It made sense to get out at that point in time, and it still makes sense. Our exit was still a good exit. But the point was that even with that big of a move and the puts being $5 in the money, the exit was only $6.05, which means we made 21%. Okay, so the positive is we made 21%. The negative is you had a stock that moved a lot for a $25 stock, and you only made 21%. So which side do you look at that? Do you look at that, hey, we made 21%, or wow, that was a huge move, and we only made 21%. But that is what happens when you're dealing in a world with where we are now, with these high momentum stocks and these massive moves that are creating incredible volatility in the options. And so it's something to be aware of, and maybe some you want to stay away from. Here's our mark-to-market graph. We do this. We are fully transparent. If you're not familiar with our alert service, we send out the alerts as I just showed you. So we send out not only entry alerts, but we send out the exit alert as well. And with the volatility that we have going on, if you've ever considered becoming a subscriber, now would be a great time. But we also show where each one of our positions is day to day in this mark-to-market graph. So this is every single day what this position is. So it goes from inception through any adjustments all the way to the closing price. And the way our strangles work is pretty much like this. It shows a loss until the breakout move occurs. So once it broke out, you can see all of a sudden we had a vertical move. We're buying a call, we're buying a put. Time decay is the enemy when you're a buyer of options, but the positive is you have fixed risk. So you can't lose more than what you paid. So we prefer that methodology. We don't subscribe to the out of the money credit spreads where you make a little and risk a lot, or selling of naked options where you're risking a lot. So we don't want to do any of those types of scenarios. So we are buyers of options, which means time matters. And then the breakout is when the profit occurs. So it's quite normal for these to show a loss until we get the breakout move that we're looking for. But my point here was it was a great triangle. It did exactly what it was supposed to do. It's an Elliott wave pattern. Flats, triangles, and zigzags are Elliott wave corrective patterns. We love triangles because they break out. But you have to be careful when you're looking at a low dollar stock. Initially, the pattern looks great, and you go look at the options, and the options are liquid and all those things. But then when you look at the premium to find out, yikes, we're paying $5 for a strangle on a $25 stock. Why? Well, that's why. So it goes hand in hand. Had we not gotten such a big move, that could have ended up being a losing trade with a big move like that. So it's a good lesson for me. It's a good refresher to remind me to, just stay away from stuff like that. But it also gives you an idea of how our alert service works. Every trade has an ID. Talk about the strategy, which of our portfolios it in. Did we win or lose on the position? How many contracts did we do? What strikes were they? What month? How many days in the trade? What was our return? And then the dollar amount. And then the day-to-day mark-to-market graph, which shows you what occurred in that every single day. We're as transparent as you can possibly be with our alert service. All right, so going back to the charts, let's take a look at our previous case studies. So we'll go back to 223. So here we were on 223 on ENBL. And as you can see, we were starting to break to the upside there with a price target somewhere between 7.5 and 8. And so here's where we are now. We have made a move higher, but a lot of consolidation from that move. Now you look at the 10-day moving average, and going back here on the 5th of March, we did trade below it, which is that big down day in the market. But ENBO came and closed back above it. And then the next 2 days, it's almost like a 3-day doji. And what I mean by that is the closing price has been almost identical for 3 days in a row. Something is getting ready to happen with this stock. It's consolidating like crazy. Now, from a positive standpoint, and what Elliott would say is, okay, we had boom, boom, boom. We had these big up days here, and now we've consolidated that move. Because if you go back, if we were to walk back over here, you can see that we had some separation. So we were a bit overbought. When an overbought condition like that occurs, one of two things is going to happen. Either the stock is going to come back down towards the 10-day moving average, or in the case of ENBL, it's going to go sideways and allow the 10-day moving average to catch up. Going sideways and allowing the 10-day moving average to catch up is the more bullish of the two scenarios, obviously. Therefore, we think that there's more to go to this. We haven't reached our target yet. So our expectation is that following this consolidation, we're going to get another nice upward move. So that's where we sit with ENBL. Bit higher than our entry, so it's profitable at this point, but not by a whole lot. So we're kind of hanging on there and waiting. And then next week, excuse me, last week, we looked at WERN, Werner, and you can see where we were then. And moving forward, so we were at 44, and we're up now to 46.06. Had a big up day, opened to the upside nicely on the 4th, couldn't hold it. Little bit overbought, as you probably would suspect. So let's go back and take a look at that. So you're getting a really good idea of that 10-day moving average rule here. You can see that where we open, notice the difference. We opened way up here. It traded even higher than the open. But with that being the open and where the 10-day moving average was, that was significantly overbought at that moment. So again, consolidation. We pulled back that day, but for the next few days, we've had a sideways consolidation, allowed the 10-day moving average to catch up. So WERN looks like it has more room to run to the upside. So again, higher than where we entered, but it still looks like more room to go. Now, ODFL, if you remember, last week we said we need one more day to see if we were going to get some confirmation. So we looked at this, and here was the position that we were in. And so let's move forward day by day and see what happened here. So the next day, Doji, big time Doji, and here comes the ADX. It's curling up. Hasn't gotten between the two directional indicators yet. So if you follow our trading system, as great as this looks, and this looks really good right here, that part looks good on the chart. Confirmation's not there from our confirming indicators, so we have to wait. And that proved to be prudent as far as the 4th of March. We had a big down day, got some of it back, and now we're pretty much back to where we started a week ago. So nothing's changed with ODFL, and we never got that entry that we were looking for. So this doesn't count. It didn't count last week. We said we needed to see if we were going to get triggered on the entry. We didn't, and we haven't yet. And so it certainly bears watching, but note that the chart's relabeled. That's also important as well. So let's go back a few days. So we were in a wave 3 at this point in time. And then all of a sudden we're not. So that was taken away. So the fact that it relabeled, for me, takes this off the list. So now I cross that off. That's not even on the watch list anymore. So we move forward to see if we can find a case study consideration for tonight. So it never got qualified. I said we would look at it last week to go back and look at the recording. But WERN was an official one. That one's looking good. And 2 weeks ago, ENBL, those two are still looking good. But ODFL, no go on that one. So now let's see if we can find something for a case study consideration this week. And here's what I was talking about as far as if you're interested in the software program, a lot of people always ask about it on YouTube, especially. It's Profit Source. The website is Profit Source, just the way it sounds, .com. And they've been kind enough to add in a lot of the search parameters that I use. So right here, EWO, bullish, corrective, bullish impulse, and consolidating stocks. Those are all my parameters that they programmed in. So you have it on the pre-computed list, which means you can just go, boom, click a button, and all of a sudden, any stocks that would show up under my criteria would be right there. Well, note, there's zero. There are no bullish impulse. And is that not amazing to you? That's amazing to me. With the day that we had in the market today, no bullish impulse stocks. Again, back to what I said when we were looking at the chart in the market. Caution is still the key. You got to be careful. And so we are. We're kind of hedged as far as our alert portfolio. We have calls and we have puts, and we didn't make any rash decisions today to take off our downside protection. Not yet. It may get there over the next day or two. Could be a totally different story. But we're not there today. And by showing that there's zero results on the bullish impulse, that's another kind of a caution flag. Again, things could be totally different tomorrow and the next day, but you have to make trading decisions by what you see each and every day. And if the indicators aren't there, sometimes it's better to do nothing than to do something and regret it later. So 0 results on the bullish impulse, which I find that truly fascinating myself. Now, we do have 348 that are in a bullish wave 3 and only 149 that are in a bearish wave 3. So you look at that and you would say, that's bullish. The ADX moving up is 1,246. So there's a lot of stocks that have an ADX moving up. But remember, the ADX can move up on a bearish trade too. It's not only bullish. The ADX, when it moves to the upside, just tells you you have a strong trend. It doesn't care whether it's a trend to the upside or the downside. It's just telling you it's a strong trend. The direction is meaningless to the ADX. And then we have some new searches here, the positive directional indicator above the negative or the negative above the positive. So whether you prefer, like if you wanted to try to trade something negative or to the downside, you would click on, let's look at stocks that have a negative DI above the positive and are in a, excuse me. I'm so sorry. I know that's annoying. That's what happens. I talk so much and I talk so fast. I breathe in some saliva into my lungs. Sorry about that. So if you're interested in this point in time in trading bearish trades, so you put an X here in the negative DI above the positive in the bearish wave 3, and then you can see, wow, there's a lot. That in itself should be enough to keep you from being too overly bullish at this point in time. There's NVIDIA. Now that's interesting, isn't it? Because NVIDIA, not too long ago, was looking really good back in February. See that move to the upside? Now look what's happened. NVIDIA's moved down. Now it had a decent day today, but when we put the 10-day moving average on, it didn't even make it back to the 10-day moving average with today's move. So yeah, today was a nice up day, but was that an up day and a longer bearish move? At this point in time, you have to respect that that's possible. And then you see the oscillators moving to the downside as well. And there's your negative directional indicator above the positive, the ADX moving up. Now, I will say I put more weight in the DMI on bullish trades than I do bearish trades. I look at other things for bearish trades, zigzags, etc. Not really a great looking zigzag here, but that's a pretty decent move to the downside there with only just a little bit of a blip here. And then you can come back and look at, well, if we expand this out, we're kind of right at resistance here. And if we get above that, there's even more resistance 10 points above. So NVIDIA's got a lot of work to do if it wants to get back into some sort of a pattern like this that was a bullish looking pattern. It's got to get above both 520 and 540. So it's got 20 points of movement to go, and it's not even back above the 10-day moving average. So you could kind of keep an eye on that one if you wanted to as far as a potential downside trade. But my point here in showing you this is that you can find positions if you like trading directionally to the upside or the downside. Here's another one that catches my eye, LULU. Another one that was, not too long ago. I mean, last year with the whole fit leisure craze or athleisure craze that they talked about, where everybody's staying at home because of the pandemic and everything shut down. People were ordering athleisure wear to wear at home, and they took off to the upside because they expanded their men's line. They've always been known for ladies' yoga pants, but they expanded their men's line and stock took off. Well, now it's in a wave 3 to the downside. Did have an update today, but that's not a really bullish looking day. We opened up, traded higher, and closed back down. So we closed back at the open, so we have a doji there. Again, not a bullish looking setup, even with the amount of movement in the market. So if you were wanting to create a portfolio, I think it would kind of be a smart thing to do at this point in time to set up equal weight bullish and bearish positions, knowing that the market can still go anywhere from here. Reiterate, we have to close above that previous wave 5 high before we can sound the all clear for the move to 420. I'm just simply not there yet. So those were a couple that just jumped off the chart at me right away. And since we did have an update today, let's stay on the bullish side. So let's look at positive directional indicator above the negative that are in a bullish wave 3. And it looks like about an equal number, maybe a few more. See if we can find a couple here that are interesting. Mosaic, that's surprising to me. Pretty good sideways pattern line. The ADX is diving down though, so that's no good. This is why I create the search that I do that has more indicators in it, because I didn't even want to look at this many charts on a daily basis, but there aren't any to look at from my search. So just now let's look at Discovery. So that ADX is way too high. So see, again, this is showing you positive directional indicator above the negative in a bullish wave 3. And we are, but you've got an ADX, that's one of the highest ADXs I've ever seen. No lie, it's, in 25 years is one of the highest ADXs I've ever seen, above 80. I'm not sure I can remember ever seeing one that high. That may be a winner there. There is no way. And this stock may run to 90 or 100, but there is no way I'm entering a bullish trade on a stock that has an ADX above 80. It is not going to happen. Simply not going to happen. So let's go back here and let's try consolidating stocks in a bullish wave 3. Now we're talking. So we've knocked it down to a couple. So dividend growth, I think that's actually a pretty smart place to be right now. It's going to show you another of the alerts that we closed. In fact, I'll load that up because I think this is something that's important for you to see. We also had this position for our subscribers. We entered this last week. So last Tuesday when we were together, we got into this one. So it's only 5 days in this trade. This is VTV. This is a value ETF. So this is where monetary rotation is occurring. So here was the pattern. It was a wave 5, but we were at 103%, not the 123% in the SPY, meaning this was underperforming the market. So value is a place that money is going to look to move. Money looks to move in places that are underperforming or undervaluing. And so this jumped to the upside. You can see boom, boom, 2 big up days gave us the opportunity to make a really nice 53% gain in just 5 days. So that's the kind of stuff that we want to be looking at. Where is money moving now? Not stuff like that has a ADX above 80. So we have the UDR REIT. I don't have any idea what this is. I don't even know. You can see the ADX is starting to curl up a little bit, which we kind of call that the sneaky ADX. So that becomes interesting, like something's bubbling under the surface. There are some options. Spreads are way too wide though. So that's no good. And then the other one is one that I'm actually interested in taking a look at, because this is along the same lines as VTV was as far as core dividend. So these are more value type stocks. See, the ADX is not interested at all at this recent move to the upside. So that would bother you a little bit, I think, because if we take a look at that ADX and then look at VTV. So you can see we made a good exit. There's the move to the downside. But see how the ADX was curling up and it was above 20 and between the two directional indicators. But when you look at DGRO here, the stock's moving to the upside 2 days in a row, again, closing near the lows like the market. And the NEX has said, ho hum, continued to go down as the stock turned around, and it really has traded higher, even though not good closes, closing on a low, but it's traded higher 3 days in a row. So that's not what you want either, and it's not in a good triangle pattern. One could argue that it has. Remember me talking about this? How many times have I brought this up, that I've seen more expanding triangles than I can ever remember over the past year? We always look for the consolidating triangles, but there's been so many of these expanding triangles, which is the exact opposite. So the point's on the left-hand side instead of the right. It's just been fascinating to me to see all this. But we're at the top of that triangle pattern. I just don't really see much of a trade available here. So let's take off. Let's for the heck of it, let's look at something, see if there's anything shows up here. Nope, no stocks consolidating on the bearish wave 3. Let's just curious to see. So let's just stay with the plain old consolidating stocks. There's Facebook. Let's look at FedEx. It's got a nice run. DTE Energy would be another good one to look at. So FedEx is pretty much sideways. That's not what we want. Let's look at DTE. Nothing there really either. Lots of sideways stuff. But we want the triangles. We want the triangle formation. Diageo, find interesting. I don't think there's liquidity there. I've looked at this on so many times in the past when there really wasn't liquidity on the options. This is alcohol, which tends to be a place that people, it's a defensive sector. When the market gets a little squirrely, money moves into defensive-minded stocks. Tobacco, alcohol, gambling are some of the sectors that are considered defensive, because the viewpoint is that no matter how bad the economy is, people are still going to drink, smoke, and gamble. That's how it works, and they've outperformed in down markets. Spreads are too wide here, but more liquid than I remember in the past, but spreads are still too wide. See Baxter. What I'm looking for is, since there's so many, is stocks that traded in the past that have worked out well, and that could be good potential candidates. Well, I guess we should look at Facebook, huh? Just dead on sideways. In fact, that's pretty close to the launch pad effect that I talk about, where a stock consolidates sideways, kind of like a flat launch pad, and then boom, stock takes off above it. It's not too bad of a formation there. So it kind of looks like Facebook's getting ready to do something. Now, whether it's a blast off to the upside, sometimes it can be, call it a failed launch and a big downside breakout. But I would prefer to see if we can't find a triangle pattern. I mean, that's so flat that it's interesting. UPS, wow, both of them. UPS and FedEx both going sideways. Dead sideways. It's no good there. Lockheed Martin. There's ODFL. Well, could we do that? No, there's just nothing there. Still looking This is how the day goes every day. Sometimes there's tons of them to look at, and sometimes there's just not many. Yum Brands, we already have that. For our subscribers, let's look at Shoe, Steve Madden. Go back to Wolf of Wall Street days. There's another one. Expanding triangle. Absolutely crazy to me. Royal Gold, here we go. This could be something. No, it's just, well, it's a descending triangle, and the ADX is awfully low. It's trying to break out, so tomorrow would matter a lot, because if we connect all those lower highs, you can see that we kind of broke out of that. This could be one. ADX is still under 12, even though it's kind of gurgling higher. Go out to July, the spreads aren't that wide, and the liquidity is not really great, but the spreads aren't that wide, even with, yeah, you could do the 26 delta call, has some liquidity and not a wide spread. All right, so let's do that. I mean, been itching to do something with gold again anyway. So let's do RGLD. Strangle. Be our case study this week. See if maybe we can get something going, because that's been pretty significant downward move. So it made a big run down from roughly 150, and then it consolidated there around 100. So we'll see what happens from here with RGLD. All right, so with that, I'll take a few questions, and then we'll wrap things up. Can I advise on the SPY looking like an expanding triangle over the past few days? I still like the idea of this descending triangle. If we were to try to, you'd pretty much have to go from here. You could have made a case that that was an expanding triangle here, which made the upside breakout. But I still prefer the pattern of a descending triangle with where we are in the SPY right now. Tesla, big move to the upside today. And it did close above the 10-day moving average. So that was a big recovery for Tesla, but now we're kind of back at an area of resistance. So the next day or two will tell the tale for Tesla as well. So nice big up day, got above the 10-day moving average. So we need to have a second close above that, or even some sort of a break above that 680 level. But it's getting there at least. But so far, you could just say that was a correction of an oversold condition. Mike, can I please explain why I didn't wear my hat during the Guy webcast? I almost did. I really did. I almost wore the hat, and I was talked out of it, but I really thought I was going to do it. I'm with you, though. I think I should have. So the fact that you asked that, I feel like I really should have worn the hat. I regret not doing it. Pinecast CRWD. Crowd strike. Here's another one. I mean, today was a nice day for a lot of stocks, but basically what we did was correct oversold conditions, you tried to say. So we got to get back above 200 on CrowdStrike to be considering anything. Now we are coming off some pretty low levels. If you go back and look at the CCI down in through here had been low, and we got much below that. So we were really oversold from a historical standpoint on CrowdStrike, but it's got to break back above 200 and follow through on that. Copper has been on a tear. I actually haven't looked at it in the last day or two, so let's take a look at it. Copper futures coming up. So we had a pretty vertical move, and then we've consolidated that a bit. And if we put the Elliott wave pattern on there, it's in a wave 3. Let's see what the DMI looks like. Yeah, it's been pretty strong. We're getting some divergence here with the fact that you can see why this big move. So here's what happens. Remember, I like the 45-degree stuff. I don't like it when it goes vertical. So we had two things going on. Copper started to go vertical, and the ADX made a lower high. So that move there on the high back on the 25th of February, basically pivot point there, showed that we're making a new high. We got a pivot point and no confirmation out of the ADX, and we've pulled back down a bit. Now, whether or not the DMI kind of resets and catches itself and turns back to the upside, we'll have to see. But it looks like the significant move in copper is over. We might get more of a consolidation type stuff similar to what occurred there at the end of last year. AEO. Do you know which exchange it's on? Yeah, I don't know. I don't know what exchange we're on here with. Sorry, I have to move on there, Kurt. PayPal. Another one that was running very nicely. You can see that we had this really nice run, 45 degrees, and then we got to go vertical. So you go vertically up, and then you come vertically back down. And we're sitting at 240, right at support with a doji. Tomorrow's going to tell a lot on PayPal. If it can hold here, look at that. Wave 4 is right at 38.2%. So a really good Fibonacci level here. So we could turn and move higher from here pretty easily up to all the way potentially to 370 if the market does want to follow through with this move and head higher from here. But at this point in time, not too decisive one way or the other. A doji right on support, it could go either way. Kind of the politically correct answer there, isn't it? It's not much of a directional call, but that's what the chart says. And then looking Peloton. $120 is pretty good support. It did get above the 10-day moving average today, but it needs back above 120. Now, if it gets back above 120, because we had a 50% correction there, a really nice doji right there on a 50% correction. So that could be enough to help this stock. And if the market does right itself and follow through tomorrow and then get above that wave 5, Peloton could be off and running again. but it's got to get above 120. So you're seeing the same thing over and over again with a lot of stocks that are bumping up against resistance levels. So today, I mean, I reiterate this, today really just corrected some oversold conditions. We need follow through to show that, yeah, we're really ready to run towards that 420 level. Going to NASDAQ with the NQ. So use the Qs. It really is kind of pretty similar scenario here with the Qs and where the S&P is. You can see there's the S&P, and actually not really. This is more vertically down. So certainly the selling has been stronger in the NASDAQ, really not the same pattern. This is really not what you want out of a triangle that's straight down. Now it is sitting on support, so it's kind of going to have the same effects as a triangle type formation, but 300 is really big for the Qs. It bounced off of it after spending 3 days here. Now, is that a really good pivot point off support right there from the 5th, and that we're headed higher? All these scenarios could happen. All I'm saying is that we're not there yet. We have to wait and see where things go from here. So it is a bit of a descending triangle, but that's more of a vertical move down, which could be an oversold snapback more than the SPY is actually. Carrie, yeah, if you don't mind, on the XLY, I'll wait. Basically, Carrie's asking, she's an alert subscriber. So when we took off, we had an alert on XLY, which is consumer discretionary, and we had VTV, which is value. So XLY has been moving down a bit. Value took off. So we took the profits in value, but we also have some puts on the market in case the market falls. So we need to stay balanced. So we could have put a different trade on. We had the XLF in the past, which was financials. That did well. So the idea was add to the XLY so that we still have a long position in an oversold area, which is the XLY, to maintain our balance here until the market gives us a clear direction of where we're going to go. Right now, the market has no idea. I mean, it just keeps bouncing around, volatilely bouncing around, which is amazing to me, the volatility around such a support resistance level. And as we mentioned in the last SPY recording, volatility marks market tops and market bottoms. Is this a market top? Maybe. Is it a market bottom? It's not really a market bottom, but are we on support? So could we be having volatility here on support for a blast higher? Possibly, but normally when you're on support and you're getting ready to take off, you get that launch pad type thing where you have very low volatility. You have a whole bunch of bars with very low intraday volatility. You don't normally have this big volatility and then a spring to the upside. Anything's possible in the market. That's just what normally happens. Is Tesla in an Elliott wave? We looked at it. Put the Elliott wave pattern on there. It only as much as it moved to the downside, it really only corrected 44%. So it didn't even make it all the way to the 50% corrective level. We have massive support waiting here. If this turns around and we head back down, right where the point of that triangle is. So down there is huge support. Maybe it doesn't quite get there, but again, today corrected an oversold condition. So you're kind of hearing the same thing over and over and over again. Nicholas, I do use the Elliott wave long forecast. Not very often. However, I do know the difference, but I don't really want to go into it because I don't use it a lot. So it just is just smooth count basically. Let's look at Apple. Go ahead and take a look at Apple and Micron. Here we sit with Apple, which I think is, from a fundamental standpoint, which you don't really trade fundamentals, but from a fundamental standpoint is extremely good buy. Now the wave 4 has corrected 72%. Well, it's broken the 70% rule that Elliott talked about, that if you got to 70%, it disqualified the pattern. So if you get into super technicals, you got to get to the 78% level, the fib level there, but 76% level, but it didn't quite make it that far. But it definitely is holding above support. Tried to break it yesterday. It did break it yesterday, but got back above it today. And we talked about this Thursday night. If Apple were to break this 120 level, it's going to be choppy to the downside because it's got a pivot there, a pivot there, a pivot there. So basically, we have boom, boom, boom. If Apple's going to break down, it's not going to be one of your vacuum type stocks that really runs to the downside that you're looking for in a down market. So it's positive that it got back above 120 today, but again, it needs to happen again. So let me go down here. So some of you ones that, let's look at UA and GE, and then we'll wrap things up for tonight. So UA, Under Armour, sponsor one of my favorite golfers, Jordan Spieth. Just a really good guy. It's in a wave 3 and nice 10-day moving average. Here we go again. Also in a bit of an expanding triangle. Not the greatest one, but a little bit of one. Let's see where the ADX is. It's not low enough yet. But this made it pretty nice. A lot of people wrote this stock off, and they were getting crushed by Nike and really struggling after they made a name for themselves. They took some market share. Then Adidas came up, and they were doing well. And then Puma with Ricky Fowler, etc. And Under Armour was just struggling, but then they've come back recently and used this 15 level as support. So here's kind of your launch pad type thing. See how all these little tiny bars here, tried to break above it, couldn't reset, boom, made it this time. But the ADX is moving to the downside. You know, clearly what we need here out of Under Armour, if you want to see this go higher, is it has to break that recent wave 3 high at 9. So it needs to get above 20. If Under Armour could get above 20, then it's got something going on. GE we haven't talked about in forever. So let's take a look at that. Or maybe not. Well, maybe we won't look at GE. Don't know why it doesn't want to let me look at it. Well, sorry about that. We'll do GE next week, John. And so let's finish up with RHE, because that's one I'm not familiar with. Oh, low dollar, $5 stock. Is this one of those Reddit stocks? Sitting on support right here. Support right at the $5 level. The wave 5 pattern is, I don't know what this was. that occurred back on the 28th of December. I don't know if that's legit or if that's just a bad quote or whatever. But send that support. If it breaks that, it's got another level of support right there around 3.5. And if it breaks that, then it resets all the way back down to 1.5. Let's look at the XLU. So we'll do one more. I want to look at the XLU too. Well, we're running out of memory, I think, here. I've got too many charts open, so we're having trouble finding stuff. Well, I need to clear some stuff off. Jets, Jesse, you think Jets is a COVID stock? So you're talking about the reopening trade? You know, Mr. Wonderful made a pretty good argument. You know what I'm talking about there, right? From Shark Tank that has hedge funds now. So here's the problem here. It's just been so many days right there in the tap box. I mean, how accurate was Elliott Wave on this? Just 2 weeks. It's been right smack in the tap box, just like Bitcoin has been. If you've been following Bitcoin, perfect Elliott Wave pattern. Went right to the target and has stayed there ever since. Couldn't be any more classic Elliott Wave on Bitcoin. Just as the same thing. So here's the argument. So the positive argument on this is people are going to start traveling again, right? As people get vaccinated and they feel safer traveling, airline stocks should do better. People are going to start traveling and moving again. The negative is it's not going to be business travel because business has changed forever. So Mr. Wonderful's point was you're going to be getting people flying to Orlando, the vacationers, you know, going to Disney World, things like that that families haven't done for the past year or so because of COVID. But those aren't the high ticket fares for airlines. That's not people traveling in business class. You know, they're not packing planes, going on business trips with expense accounts, et cetera. So his view was the move has already occurred. So he thinks that this run up here, that's it. And really there isn't much upside left. So there's opposing arguments. You have people on the financial networks all the time having opposing arguments on this, which is always good for the market, right? Because you have to have a buyer and seller. You have to somebody long and short. So we have actually, other than that big move to the downside that occurred here on the 5th, a pretty decent symmetrical triangle right inside the middle of the tap box, which means we're probably going to get a break one way or the other. And the ADX is a bit high, which is why it hasn't shown up on one of the searches, because I was interested in this. That ADX could come down, so we could go into a sideways pattern. I don't know, but other than that, it looks like a pretty good strangle to me. I would hate to, based on everything, pick a direction on JETS, but we're past time again. Thanks, everybody. Appreciate your attention. Always appreciate your time. Thanks for being with us. Look forward to seeing you again next week. For those of you that are in the Zigzag Mastery class, starts tomorrow. Can't wait to talk to you about that. I think you're going to be fascinated by this class. There's my word, fascinated. Take care, everybody. Have a great week.